Welcome back to Hamilton Life, everyone. So they all say we have sort of an area of weakness, and one of mine is finding ways to save, Anthony. Like, I mean, I really should be on top of this, but you know, knowing where you can save money, knowing where you can get some tax breaks and things like that, I think are so key. And I'm like so not there. I don't even coupon, right? Okay. So but this I find fascinating. So you're so good at taking us through and making financial stuff make sense. So now we're going to talk about using the RRSP loan to help pay down your credit card debt.
Yes.
And so I'm thinking, okay, this is cool. How do we do this?
Let me show you how this works. Well, today, this is a perfect time of year to be explaining this topic because there's a window of opportunity that we have called the first 60-day rule, that any deposits that are made into an RSP account, you can use as a tax deduction for the year that just ended. So
even though you're putting it into the 2015 year?
Yes, now that we're in the 2015, typically people think any contributions I make to my RSP is going to give me a tax credit when I file my taxes next year. But this is a great opportunity to do some backwards planning. So we know how the year ended. We know what our income is that we're coming off of. Here's a last chance. We have the first 60 days, the first 2 months of the new year, to do some last minute planning in our RSPs that can tweak or create a tax refund that we didn't capitalize on in the
Which is great and amazing timing because many of us are dealing with credit card issues.
You got it. I just got my credit card statement from Christmas, and I'm like, geez, I got to stop buying so many presents.
Exactly. I mean, and so many of us feel that way. So this is great timing for all of this. So take us through as to how this would actually work.
Okay. There's three. What I'm going to teach you is how to generate a tax refund that's large enough to pay off your balance of your credit card.
Okay.
So there's three things that you have to first check before you do this. One is that you have to know what your 2014 annual income was. You have to then compare that income to where you fall in the tax brackets. In Canada, we have a progressive tax system. So the lower income people, they pay a smaller amount of taxes, and as your income rises, you get taxed a higher percentage in certain brackets. So you have to know your tax brackets, and then you have to check your RSP room. Because we're going to be doing an RSP loan strategy, we're going to be depositing a larger than normal amount of money in your RSP, so you have to make sure you have enough room to make that deposit work.
Makes total sense.
The good thing is that most of us are spendaholics, so we don't save a lot of money. So we have the RSP room that doesn't get used every year that we earn it, gets carried forward and it builds up. So most of us, that's not going to be an issue, but you still have to double check it.
Okay, perfect.
So here's an example. I used this stock photography
All right,
photo.
hi Tom.
There's Tom, just to kind of humanize this a bit, right? Bring it to life. So here's an example. We checked out Tom's income. He made $55,000 last year. Now we checked also the RSP room that he has available is $34,000, so it's plenty to do this strategy. Now Tom's sitting on a credit card balance of $3,000 after coming from Christmas, right? It's a big time of year of spending, so his credit card balance is large, and he's currently putting away $100 a month towards that credit card. So he's not in any time fast rush to pay it off. And he's also putting away money into his RSPs, which is good, and we want to factor that in. If you're currently saving money in your RSPs right now, we want to know what that amount is because we're going to borrow that payment, we're going to pause it, and add it to the RSP loan payment.
Okay.
So now that you know those kind of key factors, we know that Tom's income is $55,000, so here's the tax brackets in three categories. There's a lot more of them, but I just did a snapshot of three. So Tom is in this 31% tax bracket. That means that for every dollar that Tom earned from $44,000 up to $70,000, all the income earned,
he's paying 31%
on every dollar that he earned. Now, knowing what the brackets are below you is very important because you have to find out where you are. So if I made $45,000, I'm right at the entry level of that bracket. Now, when you make a deposit or a contribution to your RSPs, that counts as a tax deduction. So you're actually lowering your income. You're putting yourself backwards. That's what triggers the refund.
Right.
So here's an example of how this works.
Okay.
Tom, $55,000 income, we're going to borrow $10,000 and put it into his RSPs. That brings his income down to $45,000. So because they taxed him throughout the year at 55, and now we're reporting that he made 45, that generates the tax refund.
There we go.
They have to give it back to you. The taxes.
light bulb goes on over Linda's head. But that makes total sense now, though. Like when you see it work through this way.
Yes.
So this is nice.
Now it's important that I knew what the tax brackets were because if I sometimes a lot of advisors will mislead by saying that you're going to put whatever bracket you fall under, that your top bracket that you reach, that no matter how much money you put into your RSPs, your full return is going to be based on that highest bracket.
Right.
But it's not the case. So in Tom's case, if we put at him $55,000, if we knock off $10,000, we bring him down to 45, he's still within this bracket. So that means all of that $10,000 is going to be a refund based on that percentage.
Okay.
Now, if he was on the borderline here and we only could claim $5,000, and then he dropped into the next lower bracket, we're going to get a smaller return.
Right.
So we always try to maximize the best bracket to get the best kickback.
Makes total sense. Sure.
So
okay.
there's that $10,000 is going to generate a $3,000 refund, which can be used to pay off the credit card. So here's my summary notes here. We're going to apply the tax refund to pay off the credit card debt. Then we take the payment that was going towards the credit card plus the RSPs that we paused. We got $200 to play with. We're taking that $200 and directing that towards paying the RSP loan.
Excellent.
Now what we've done too is because people are terrible at saving, but they're responsible at paying their debts, we've taken your saving strategy and turned it into a loan payment. So it's like a forced way of saving money.
Yeah, excellent
but
strategy.
You got the $10,000 right away. Now, when you look at too, there's another advantage. Not only are we generating a tax refund that's wiping out the credit card debt, but now you've gotten $10,000 working for you now versus saving up $10,000 over time.
Yeah.
So I did the math. If you were to put the loan payment directly into an account and save it up, it would take you just over 4 years to add up to $10,000. So I want to show you that if you had $10,000 and you could invest it over 30 years, let's say you're a person in their 30s, averaging an 8% return, that $10,000 would grow to $100,000.
Nice.
But if you started 4 years later, so instead of having the full 30 years to grow, you waited 4 years.
Huge difference, eh?
The difference is, instead of trying to figure out the math in our head, I put it there. So it's a $26,000 advantage just by coming out of the gates early with your deposit. So this strategy works really, really well for 2 reasons. Wiping out the credit card balance, which is good, and it forces you to start saving towards your RSPs, and it gives you a head start.
Makes complete sense.
Yeah.
If it makes sense to me, it should be making
Hopefully.
sense to you. So thank you so much. Great.
No problem.
Really easy to do. If you want more information, you can give Anthony a call at 905-297-1179. You can also email him at anthony@capfinancial.ca and also go to capfinancial.ca, which is the website for more information. We'll see you in a few weeks. Thanks so much.